everyone, and welcome to another episode of the Heartland Franchise Guy, your insider's guide to all things franchising in the local area. I'm Blake Martin, local small business franchise owner and your Heartland Franchise Guy. This is the place for advocacy, resources, and education on all things franchising in the local area, and it's a great place for any entrepreneur to stop by if they just want to learn more about small business and franchising around here. Today's guest is a returning guest, so I'd like to welcome back Jim Reiff with the Nebraska Enterprise Fund.
Hey, Blake, thanks. Glad to be back. It's super fun to be with you.
You're welcome. Despite your performance last time in the popular vote, we decided to bring you back because we have an important new topic.
We got two important new topics today.
Oh, you're already failing.
No.
We're not doing two topics. We're doing one.
Well, we got a bonus then.
Okay, bonus topic. Well, there you go, Dylan.
Yeah.
Got a bonus topic.
Bonus
Your work's cut out for you today. So thank you very much for being here. Let's start with tell me about the Nebraska Enterprise Fund, and that's going to bring us into the topic of the day, or at least one of the two, which is the State Small Business
Credit Initiative.
Okay, so
Yeah.
Nebraska Enterprise Fund is administering that. Tell me what you guys do.
Nebraska Enterprise Fund, we're what's called a CDFI, a Community Development Finance Institution.
Mm-hmm.
That is registered with the U.S. Department of Treasury, and we are qualified each year. We submit reports and everything to them annually. They monitor us. And what we were created to do 28 years ago was to help grow our small businesses in Nebraska and Southwest Iowa.
Uh-huh.
And our focus initially was Nebraska. We moved to Southwest Iowa. But we do about 100 loans a year to businesses in both sides of the river, and do also technical assistance where today, for example, we're recording, I think, 4 weeks ahead of time, but we're doing QuickBooks training today, for example. We do trainings with a group called EEC. We collaborate with all kinds of other partners to bring on training events throughout the year, and we also do one-to-one coaching and support. So somebody might have a question about their marketing plan or their business plan or something. So that's really what we are. CDFIs in general, they have a lending component. We've chosen small business. They have a training component and a technical assistance component.
So you're providing the lending, but then also providing tools to help people either to prepare to utilize that loan effectively as a business owner and or to continue learning and grow their business.
Exactly. We want to see every business in the state work so that they can grow, expand, and prosper.
And when would there's plenty of banks that give loans. Why do you exist? When would somebody come to you?
Somebody comes to us, and I'm glad you brought that up. We want to maximize what the banking sector is able to do. Let's face it, Nebraska banks are great. They do a great job. They work super hard. But sometimes there's a loan they can't do the whole amount. So they can maybe do 80% or 70% of the loan. We can come in and gap finance that to the bank.
Okay.
And that's where we provide a subordinate loan to the bank, and we're able to allow that business owner to get the funding they need. In other cases, maybe it's a loan, first-time startup business. The bank says, we like your concept, but we're not quite able to pass this loan yet because of regulations usually or something else. We can look at that loan, work with that client. I've had several times where we've worked with a client and 3 to 5 years later, get a call from the banker, say, Jim, what do you know about this client? Can we take them off your books? And that's exactly what we want to see. We want to see that pass. Yep.
So you're not a competitor to the banks.
Not at all.
You're an alternative when it won't work with
either an alternative or more and more becoming a partner with them, because there's deals that they know are good deals. They just can't quite get the whole piece funded. So we can work with them.
Well, in reality, if my memory serves, there's been times when I've sent people your way through my brokerage who they're looking for a small business franchise, but the loan amount is too small for a mainstream bank. And I don't mean that in a negative way. I mean, it just doesn't make sense for them. And that's where you've come in and been able to help provide that funding.
Example, $25,000, $50,000 loan, sometimes the paperwork is just as much for the bank as their regular loans.
Yeah.
So it's really hard for them to make that work. We are able to really help when it's a smaller loan or a startup that the bank is going to get involved. It's just they can't today.
And that typically you're lending up to about $150,000.
Our normal loan product goes
micro lender.
Yep, micro and small business. Typical loan is up to $150,000. Average is probably about $45,000.
Is that a standard across all states? I mean, do micro-lending programs like yours exist in most states?
There's micro-lending. There's CDFIs in almost every state.
Okay.
Depends.
And again, CDFI
is Community Development Finance Institution.
Okay.
And it depends on the state. It also depends on the funding source. We have federal dollars from both USDA and SBA.
Yeah.
And they define microloans as $50,000 or below. Other places will define a microloan maybe at $100,000 or below. Some define it by the number of employees. So it really, each state's going to have different criteria. Each organization's going to have different comfort zones and different
but there's typically a CDFI solution that really works with smaller type loans.
In almost every state there is. And if there's not a CDFI, there's other lenders. U.S. SBA has a lot of micro lenders across I believe every state, including the territories. So if you need funds, they have programs across the country. USDA for rural areas has programs called RMAP, Rural Micro Assistance Program. So that's in most states, if not all states.
Yep.
Those are just two examples.
Gotcha. Now, as a segue to one of the topics that we wanted to discuss. Oh, by the way, you are the executive director of Nebraska Enterprise Fund, right?
That is correct.
Okay.
Yes, I am.
Gotcha. And then you also have bilingual folks on your team.
We have, well, including myself, 3.5 Spanish speakers. I'm the half. And we've actually just hired somebody that speaks French. So we have a greater talent pool than we had in previously. So super excited to have that third language skill now.
Yeah. Well, congratulations on that. Great service.
Yeah, thanks.
Now I'll segue.
All right.
Typically, those loans that you're providing are 150 and under, but my understanding from some discussions we had that led to you being a guest here is there's a new program that's at least one example of where you may be able to go above that, and that is this State Small Business Credit Initiative,
correct,
which you wrote the grant for, or you wrote the...
we wrote the proposal. It was an open proposal.
That's a better term.
And this money came from the U.S. Department of Treasury, and you have it written down. There were
$10 billion in federal funds to create jobs across the country.
Yeah, and they allocated $64 million to Nebraska, approximately, plus or minus a little bit.
$64 million
to Nebraska. Us, a group called Omaha 100, and Invest Nebraska are able to access this funding. And so we have an allocation right now. About half of the funds have been dispersed so far through Treasury.
Okay.
We have an allocation, and that allocation allows us, it's designed really to attract private investment into underserved areas. And they're calling it SEDI, S-E-D-I, which is socially economically disadvantaged individual owners. So that includes businesses that are owned primarily by underrepresented folks, which is a wide range, but includes folks that have been subjected to prejudice in the past, either racial or ethnic. It includes veterans, because veterans oftentimes have great ideas, but they have a hard time getting the funds they need to get going into business. It includes women, because women entrepreneurs traditionally haven't had the same access. That's changing, but it's still there. It includes tribal members, so somebody that is a First American, or tribal American, they'd be able to do that. It also includes long-term rural community members. So say somebody in the middle of the state wants to set up a franchise.
Yeah.
They go to their bank, and the bank says, we can do some of the funding, we can't do all of the funding. They're also eligible as a SETI qualified. It also includes people in investment areas, as the CDFI fund defines that. And there's investment areas scattered throughout the state. You have to look. I can't show you the map, but there's probably 30, 40 of those across the state. So all of those are qualified. That doesn't mean we can't do another loan. It just means our focus is on the SETI populations.
So if I understood that correctly, there's sort of two different categories of qualifications. One is if you're an owner that falls into one of those underserved classes.
Yep.
But the other would be, regardless of who you are and what your background is, you might be a Caucasian male like myself.
Yeah.
but you're providing the services within the underserved areas or the CDFI qualified areas or rural areas, which are underserved areas.
Right.
And it doesn't matter necessarily the background of the owner, but the people that they would be serving, the community they'd be serving.
And we don't have to do 100% to steady populations either. We have some leeway to do other loans.
Just have to show that it's legitimately serving that purpose.
And the focus, like I said, the second part is that really trying to bring in that public-private match. So this is public funds. It's trying to encourage private match. So over the lifetime of the project we invest in, that project has to be one that's growing, something that can prove or at least demonstrate they have the potential to attract 10 times private investment over 10 years. So it sounds like a lot, but you're also thinking, no, that's over 10 years.
Right.
So somebody, maybe the bank does a loan, we do the loan with them to match, and over the next 10 years, they're going to grow and add 2 more offices or 3 more offices. They're no problem showing they're going to need that much private investment. So that's the other key thing. And on that, Blake, a minimum is 1-to-1. So $1 of SSBCI money can be used for every $1 of bank money. Obviously, we want the banks to do more if they can, or the private investor. It can be other private sources. It just cannot be other federal sources.
So that leads us into a good discussion of how does this exactly work? You were allocated the funds, but what types of, I mean, now we understand who it can provide services to, whether that's the business owner or the community that business owner is serving. But how does this work? I mean, this is all very new, right? Like this allocation just recently happened.
Yep.
So some of this we're probably still figuring out, but whether I'm somebody that's starting a business or I'm a lender that's like, wait, whoa, what's this? Because there's a lot of lenders that don't even know this exists right now, correct?
Yeah, no, and this is a perfect tool for a lender. We've closed one so far. I'm not going to give a lot of detail, but they came to us, and they needed an amount of funds because
they being a business?
They were a for-profit business, growing business. They needed a certain amount of funds because they're growing, and they needed cash flow right now. Next year, they're gonna probably have 3 to 4 times sales next year than they have today. So they're growing super fast. And we said, okay, we can do this, but we need a private match. So they went out and they found a private investor. It wasn't even a bank in this case, but they found a private investor. And so our $250 matched another $250, and over 10 years, I have no doubt that
$250,000 to $250,000, and that could have been a bank or a private investor.
Exactly. And then over the next 10 years, I have no doubt, because they're growing so fast, they're going to have $2.5 million plus of private investment over their tenure. A second deal we're working with is with a bank. And the bank, because of the way things are, the bank wasn't able to use some of the other tools. They couldn't use some of the guarantees that are available.
Sure.
But there was a lot of real estate available. So they said, Jim, or NEF, what if you do part of this? So the bank is doing a portion, and we're going to do another portion, and that's going to be able to allow the bank to do it because they couldn't quite do it alone. So our money is actually helping the bank de-risk and also meet regulatory requirements. And we're going to get another deal done just through that way.
So to throw you a softball and to rephrase here, in both of these cases, the existence of these funds through you, the SSCDI funds, SSBCI, excuse me. Yes. I'm still getting the acronym. SSBCI.
There's too many of these acronyms, and they change every
now
day.
It's a new one. Throw that in the mix.
Yeah.
The existence of these funds are probably what made it possible for that private funder or the bank to even want to move forward on their half of it.
Yeah, and in the second example, the bank wanted to move forward. They actually came to us and said, could we use these funds for this? Because they know it's a good deal, but because of regulatory and internal controls, they were having a hard time. Now we're making a good deal even better by maximizing the bank resource and allowing us to grow. And grow a business in Nebraska that over the next 10 years is going to grow even more, grow more production, grow more sales, grow more tax revenue, grow more employees. I mean, it's a win-win-win for everybody.
question for you on, so again, how that unfolded with your great examples. Thank you for the illustration. This is new. Very few people know about it. I mean, we all know the federal government does a great job of advertising programs. No, they did during COVID, don't get me wrong.
Some do better than others.
How did it even come about that you became a part of this? Was the lender aware of it? Did the business owner come to you?
No, we were talking to the bank in general, and then we brought up that we have this product, and then a couple weeks later I get a call from the banker and say, hey, is there a possibility? And we started talking, and then they started their due diligence. We've been working closely with them through the whole due diligence process. Neither one of us has gotten it all the way to credit committee yet, but I can tell you that both of us are getting real close to taking it to underwriting and into credit committee and feel really good about where it is. So
it's very close to closing.
And it's the key is, though, we're working with the bank. And again, sometimes people say, oh, the bank. No, we're working together with the bank to make this happen. This is a collaboration, and neither one of us would have done this without the other.
Great point. Yeah. So are there minimums and maximums for the SSBCI? I got it right that time. The SSBCI funding?
Not really. Well, there kind of is. If the most we can work with is a $20 million deal.
Okay.
And it has to have less than 500 employees.
Okay.
So say we did
kind of the SBA's definition of small business. Yeah.
You never guess how Treasury and SBA work together on that one. But, think of it this way. Say that we did that. Say we found a $20 million deal. The most we could do was $5 million on that $20 million deal. If it's a $2 million deal, we could do up to $1 million, and the bank could do $1 million, or the bank could do 1.2. We could do 800. We just can't go past that 1-to-1 on our part.
I see.
But the bank could be 75%, because the bank. There's another deal we're working with in South Omaha, and the bank is going to do more than 50%. I don't know how much yet. They're still working on that, but they're going to do more than 50%, and then we'll gap the smaller part. And technically, we could go as low as $25,000. We'll probably, because we have our normal funds, probably more augment what we can't do rather than have funds competing against each other.
Well, that makes sense.
Yeah.
Do you anticipate, we're recording this in 2023, earlier in the year, do you anticipate having the funds to be allocated throughout the rest of this calendar year? I mean, it's a first come, first serve.
It's first come, first serve. So to the bankers out there, if you need,
you get up to $64 million in Nebraska.
Well, that's in Nebraska. We don't have the whole allocation. There will be a second tranche and a third tranche. So as long as we place the first part and our partners place the first part, there will be a second tranche.
Okay.
And so, there would be more available. $10 million is going to go quick,
Sure.
Because, once we get, I'm pretty sure we'll have some $500,000 to $1 million deals coming up. And so if you're interested, just get a hold of us, and we'd be great to talk to you.
If you're a prospective business owner, existing business owner, and you need a loan, in addition to reaching out to you at Nebraska Enterprise Fund, which you can Google,
right?
Would they just want to bring this up to their commercial lender?
They should bring this up.
SSBCI.
They should always bring it up to the banker, because if the bankers, sometimes it's amazing what will help a banker go from being a little nervous to being positive about a deal. Yeah. So because we can gap finance even with our regular funds, but yes, definitely with this, if you're a bigger project and the bank is going to need a little more oomph to get it across the finish line, definitely we want to be talking. The sooner we can be talking to you as the business owner and the bank, the better, because that way we can make sure we understand, everybody understands their role and how we allocate the funds so we don't breach contracts. For example, the most this funding can do is a 10-year note. So if it's real estate and equipment, the bank may be able to get you quite a bit better terms on real estate, but they may not be able to do as much on equipment. So if we can do equipment and the bank does the real estate, everybody wins.
You're in that scenario before. The $250 that you're providing through SSBCI can go to one component of the loan,
right. Yep.
And theirs goes to another component of the
exactly. Loan. And then this is helpful too. Some of the things that you can actually use the funds for, it's a wide range. People would say, oh, is this restricted? You can use it for startup costs. So
Okay.
when you're starting a business, your marketing,
Including a franchise.
I was going to get there, startup costs, working capital.
Just start there, Jim.
So a lot of people, they might not have generate income for the first 3 months. Some of this can go towards working capital.
Okay.
For those of you working with Fran on the franchise side, absolutely, franchise fees are 100% included in the SSBCI. So we can look at working with the franchise fees, with equipment, with inventory, construction. It has to be active, an active activity. So if you're doing real estate, it has to be for your business, or at least 60% for your business. So say you're building a new headquarters and you want to rent out a little bit of the shop, but you're going to take over half of it for your business. That you can do. If you're going to do 50-50, we can't participate. But as long as it's 60% or more is actively your business and your business is an active business, we're totally good with that. Construction, renovations, certain tangible and even some intangible assets. So it's a wide range.
Yeah, sounds like it. It's not just a few things.
No.
And in case people aren't memorizing this, I mean, you can hit rewind, but Nebraska Enterprise Fund.
Nebbiz.org.
Nebbiz, so N-E-B-B-I-Z, double B in there, NEBBIZ.org.
Yes.
Or they can call your personal cell phone between 10 and midnight on weeknights.
Well, or
between, give that number out?
Or between 8:30 and 5 during the week, where it would get you an answer. Or they can call our head office number at 402-685-5500, and my extension is 155. Or look up Jamel Hamilton also.
Gotcha.
I think his extension is 204.
And of course our audience knows that anytime they can't take down this information, scan the QR code on the screen, get in touch with us, and we'll make sure to make that connection for you.
Absolutely.
Get you right to Jim at about midnight on a Monday.
Yep.
What else do we need to know about SSBCI that we haven't discussed yet?
Our interest rates are going to be equal or competitive with the banking rates. If you're a steady business,
so you're trying to match them up.
Or in some cases we'll be able to blend your rate down a little bit, especially with prime being at 8.25 today. It may change by the time we go on the air.
Blend your rate down, like pull the overall rate down by going below what the bank is offering.
We may be able to go a little bit below prime. That is case by case, obviously.
Sure.
That's part of where we work with the bank. There will be a minimal closing fee, but that's normal.
Yeah.
We do require, and I can't emphasize this, we do require that private investment. So it can be a bank, it can be somebody, it might be somebody that's been opening a second business, or they've sold some land, they have cash available that can be proven. And
they got to have skin in the game. They got to have through their banker, or whether that's through private funding.
Right, and the whole idea again is that pulling in, encouraging private investment in underserved, underrepresented populations.
Yeah.
So that's, if you think
really
about
isn't all that different from a traditional SBA or conventional loan, right? You got to put some of your own liquid capital into it.
Yeah, and this is a great way to help the banks do their job even better. Nebraska banks do a great job, so this is just one more tool they can use until we run out of that money.
Gotcha. Do you think there will be any renewal for this, or is that just
there's 2 more tranches? So as long as Nebraska places all its funds, there'll be more. But I don't think we'll see it after the $64 million in Nebraska.
Okay.
Now, because it is a loan, of course, it does recirculate. So as people repay, we'll have a second and third and fourth round of funding opportunity. The other thing that's key when we're working with a financial institution, especially the banks, we're able and willing to subordinate. So that allows the bank to stay in a first position, and we take a second position.
If things go sideways, they get their money first.
They get their money, but it also, because of regulations, it keeps their money is even more secure in a first position. So it helps them with regulations and so forth. So it really gives them a lot more range. Yeah, and I'm thinking, just because people do ask, things you can't use this money for are speculative activities, wildcatting for oil, for example. You can't use it for gambling. Guess that's a surprise. Can't use it for illegal activity. So if
No
it's
CBD shops in Nebraska yet, right?
nope,
Because it's not legal here
not,
yet.
and even if it was
It's not
legally,
legal federally. So.
well, that was the point. If it's illegal locally or illegally at a national level, that we can't do it.
Sorry, Dylan. Never mind that loan.
Illegal in any of those places, obviously any other illegal activities. In certain rare cases, we can actually use it for refinancing, but there's a lot of conditionality. So if you have a high interest rate debt that has a balloon payment or a bullet payment, it may be possible to use this. I can't guarantee it. That's a lot more stringent, so that it is a case-by-case basis.
Got it.
Then just the second thing I'll reemphasize, but it's got to be an active business versus a passive. So real estate development, house rentals, those things don't.
Because again, the whole idea is to engage private funding into these
passive or into active businesses that create jobs.
This has been fantastic. Great information and great timing on this. So thank you so much. I mean, you're literally one of 3 people that could have explained this to our listeners. And we appreciate you taking the time to share all this with us.
And thank you. And if you don't mind, the bonus is Nebraska Enterprise Fund will be leading what's called a Veterans Business Outreach Center. Mm-hmm. And this is huge. We're going to be able to provide services to veterans across Nebraska and Iowa. Veterans and their family members, primarily in forms of training and coaching, but huge opportunity. So we're really blessed in Nebraska and Iowa to be able to serve our veterans in this way. So I'm sure we can talk about.
And the tie-in there is that was already one of the underserved groups, so to speak, veterans, that can apply for the SSBCI.
If you're a veteran that wants to open a franchise and the bank says we can fund part of it, but we can't quite do all of it, come talk to us.
Perfect. Jim Reiff with the Nebraska Enterprise Fund. Tell me one more time, how do folks get a hold of you to learn about both the VBOC, the VBOC, and the SSBCI?
Yeah, Blake, Nebraska Enterprise Fund, the website is nebbiz.org. That's nebbiz.org. And you can call our line 402-685-5500. My extension is 155, and Jamel's extension is 204. And we will be able to help with any of the questions as well. And watch for us. We have Facebook, we have LinkedIn. There's stuff coming out all the time. So
perfect. Thank you so much for being here and sharing with us today. We appreciate that. And as a segue to Facebook, social media, etc., don't keep us a secret. There are going to be people that you want to make sure hear this, because there's just not a lot of information out there about these programs. So be sure to share this with anybody you know, whether it's somebody in the lending environment, financing environment, and or somebody that's looking to grow a business or start a business. Make sure that you share this. Don't keep our podcasts a secret, or any of our episodes of the podcast, whether they have Jim in them or not. So share, subscribe, and follow. And we will see you here again soon on another episode of the Heartland Franchise Guide.